Hello everyone, and today I'm going to talk about Canadian silver ETFs. I already made a video about Canadian gold ETFs, and this is kind of a similar video but about the silver ETFs. So there are 6 Canadian silver ETFs that trade on TSX, the Toronto Stock Exchange. It's HUZ, which is the Horizons Silver ETF, then it's SVR, which is iShares Silver Bullion ETF, then it's SVR.C, which is the same but the unhedged version, then it's SBT, it's Purpose Silver Bullion Fund, then it's SBT.B, which is the same as the unhedged version, and then it's SBT.U, which is the same but trades in USD. So let's first consider the 3 ETFs that trade in Canadian dollars and that are currency hedged. So the 3 ETFs are HUZ, SVR and SBT. So HUZ has a management fee of 0.65% and management expense ratio of 0.79%. Then SVR has a management fee of 0.6% and management expense ratio of 0.66%. And then SBT has a management fee of 0.4% and the management expense ratio of 0.45%. So in terms of expenses, the main parameter that we need to compare is actually the management expense ratio, which includes all the expenses that this ETF has. So it includes both the management fee that the company that manages this ETF charges to itself, and also it includes all the expenses of the of holding the underlying securities and underlying assets. All the fees connected to that. So when we compare these 3 ETFs by the management expense ratio, we see that the clear winner is SBT, which has the lowest management expense ratio. But this ETF also has the lowest trading volume among these 3, and it can be potentially it can be a downside in terms of liquidity. I'm going to talk later about this issue. So now let's consider the silver ETFs that are traded in Canadian dollars and there are currency unhedged. So there are 2 of them, it's SVR.C and SBT.B. And SVR.C has a management fee of 0.6% and management expense ratio of 0.67%. And SBT.B has management fee of 0.4% and management expense ratio of 0.51%. So again, if we compare it by the management expense ratio, we see that the winner is SBT.B. It has the lowest management expense ratio, but it also has, as in the previous case, it has the low trading volume, which might be a downside. Now let's consider the ETFs that trade in US dollars. There is only one such ETF, it's SBT.U. It has a management fee of 0.4% and management expense ratio of 0.61%. So there is nothing to compare it with. There is just one ETF, but it has some downsides or disadvantages. So first, as with the other ETFs from the SBT series, as I mentioned earlier, it has some low trading volume, which I'm going to discuss later. But also this particular ETF, SBT.U, it's not traded on Wealthsimple Trade platform, and that is a disadvantage because the Wealthsimple Trade is the only platform in Canada that doesn't have any fees, any commission fees, and so if you use Wealthsimple Trade for your investments, you can't buy this ETF there. So now let's consider all the 6 ETFs in one table and compare them all together. So we see that the lowest management expense ratio is in the ETFs SBT and SBT.B, but they also have the disadvantage of low volume. So let's now discuss this issue of low trading volume. So these are the screenshots from the Wealthsimple Trade app for the SBT and SBT.B ETFs, and we see that the volume in the first case is 610 and in the second case is just 10. So normally when we talking about stocks, low trading volume necessarily means poor liquidity, but it seems that in the case of ETFs it's not always the case. So I found two articles on the internet. The first one is from Horizons ETFs and the second one is from RBC. The first one says that low trading volume of an ETF does not mean poor liquidity, and it goes into some details to explain why. So these articles basically say that ETFs are open-ended funds, and their liquidity is ultimately determined by the liquidity of the underlying securities. And so the first article says specifically that an ETF that trades 1 million units a day has the same liquidity as an ETF with the same underlying securities or index that trades 0 units a day. The second article basically says the same thing. It says low trading volume doesn't mean low liquidity, and basically it says that most Canadian ETFs predominantly invest in liquid securities that trade on major exchanges around the world, and that's why most ETFs have good liquidity. But the issue is kind of that with this in mind, for ETFs it seems that we cannot actually determine the liquidity of these ETFs. Like if the trading volume is not an indicator of liquidity, then how do we know if these ETFs are liquid or not? Like in this specific case of SBT, SBT.B and SBT.U, it seems that they invest in silver bullion, like physical bullions, and it's not actually clear if this is liquid or not, because it's not like you cannot quickly buy or sell silver bullion. Like you need to order them, and probably they will be delivered like several days later. I mean the physical bullions, like you cannot expand or contract your holdings quickly. So that's why like it's not clear whether these ETFs are liquid. So like I would prefer that this that the ETFs would indicate their liquidity, some kind of measure of their liquidity in their fact sheets or prospectus or whatever on their websites, but it seems that currently it's not the case. So it's very kind of confusing and difficult to deal with this issue. So if anybody knows if these ETFs are liquid or not, please leave a comment below. Okay, so again we look at the table with our 6 silver ETFs. So thank you for watching this video. Please subscribe to my channel on YouTube. Please support my content financially on Patreon, and have a good day.